Hello everybody, this is my first video and I am going to tell you about technical analysis. Technical analysis basically means we use a chart and recognize some patterns which already found before. So we will link past with future and we can do so with the help of charts. Basically, technical analysis is based on the psychology of buyer and sellers, how they react to a certain situation. It is based on price mechanism. And by studying them, analyzing them, we can predict futures very exactly. Almost 99% of times you can predict the market very exactly and accurately. So let me use one basic example, basic technical analysis example, so that I can explain you whole concept. And after watching all the videos, you can also predict the markets very well. So let's start. So these are the few terms which I am going to use in this video. So first of all, there is a normal trade. Normal trade means we buy first and then sell, which is generally happen in the normal day-to-day life. We go to a shop and we buy something and then we sell to somebody else. But in the markets, in share market, in commodity market, in forex, short selling is allowed. Short selling means we have to sell first and then we buy. It means we don't have the goods, but we can sell it and then buy it. This is the second term which I am going to use in this video. And the third and the most important thing, that is stop loss. Stop loss is used to save over capital. Suppose I have buy something, some share or some product at rupees 100 or $100. Now I think that it may fall if any speculations or news comes or something happen in international market and it falls, and it may consume my whole capital. So I am ready to bear 20 rupees loss. So I put a sell command at 80 rupees, sell command. So if anything happens and if I am wrong, then it will fall and it will automatically sell at rupees 80 and my loss will be restricted to rupees 20. So basically stop loss is used to save capital. So in this video I am going to tell you about the psychology of technical analysis, how it works, how charts are used to predict futures. See, this is whole concept of technical analysis is based on demand and supply. Demand means buyers, it has inverse relationship. When price falls, more is demanded, and when price rises, less is demanded. On the contrary, supply has a direct relationship. As price rises, the supplier earns profit and he tends to supply more and more of the product or goods. So basically this is the point from where seller is not ready to go down or not ready to sell below 50 rupees. So it gives us our support line, because he may be receiving, suppose I take an example of crude oil. If he may be receiving the oil at rupees 40, so he is not ready to sell it below it because he may suffer losses. And at rupees 100, the buyer is not ready to go up because he thinks it is a wastage of money if he buys more than rupees 100 or $100. So it gives us resistance line. So basically what I got, two lines I got, that is rupees 100, that is resistance, and at rupees 50 support. So I draw this line on this graph. This is resistance and this is your support. So below 50 the seller is not ready to sell and buyer has to wait, and after seeing that seller is not ready to sell below 50, he start buying, and it is also low price, so he thinks that it is time to buy. Now at 60 more buyer comes, seller is selling, more buyer comes, as there is disequilibrium, more buyers comes at $90 and it at last reached $100. Now buyer is not ready to go above this price because he knows that it is a wastage of money, and seller is waiting here. Seller thinks that he may sell, he waits, but his product is not selling. So in that case he has to reduce some price in order to sell his product. And these buyers now become seller because they have already bought here, purchased here. So they start selling. And it keep on selling. And it reaches the point of 50. Again, it reaches the point of support. So here two things may happen. Either it will bounce back or it will go below it. That is known as breakout. So the question in your mind arises that why it will fall below 50, as it is a very strong support. Sometime it happens, suppose Donald Trump has allowed to drill 2-3 more refineries where the supply of oil has really risen, and the supplier get it at ₹20 per barrel. So he is ready to sell at ₹30 and supply shifts. And we got a new support line. So our new support become at $30. So we can sell here and buy at this point. So we achieve a profit. So these support and resistance lines are the basics of technical analysis, and these are really very effective, and we can use it to trade. Very big brokerage houses use this support and resistance and this technical analysis to earn huge profits. So see how they use it. You have to sell here, and you can put a stop loss of above this buy command, stop loss. So there are very less chances that it hits your stop loss. And see, if you put sell command here, it falls down and you can exit here, buy here. See how much profit you have earned. So by using this support and resistance, we can earn very huge amount. So while going through this technical analysis videos, I will discuss each and every tool of it and how it is used and strategies. All I am going to present in coming videos. So now I show you the application of this support and resistance on my monitor screen.